Good afternoon. Today is Friday, March 31st. My earlier attempt to record has been unsuccessful because of low bandwidth and I ran out of power because I was outside doing the recording. Anyway, I'm back home, and just to recap, overnight on Wall Street, we continue to see US equity continue to edge higher. But I think because we are into the last day of trading for the month of March, and every month end is going to be quite crucial because the closing price across all asset classes by tonight will determine the direction for the next following month. And I believe next month is going to see a spike in volatility. As far as equity is concerned, I think the grind higher in a three-way formation from the low basing, let's say, on the Dow Jones, we can see that the low traded in the mid-March was 31,429, and the market has been grinding higher in a three-way corrective pattern, and this is setting the stage for the continuation of the downfall for that we see at since last year. So we can see that the price right now is edging higher, but top side is actually quite limited. I think the market at most will actually go into 33,140 to 33,450 levels, and thereabout I think the market will come under selling pressure. And if that's the case, I think somewhere in the second week of April we may see a very rapid decline in equity prices in the States. So I'm actually quite bearish going forward. So any more further rally in this equity market is not going to lure me into buy, at least not at this price. Okay, so basically I'm looking out for selling opportunity, ideally within this bracket prices of 33,140 to 33,450 in the Dow Jones. In the S&P 500, it's the same thing. The market actually rebound from 3,808.8 all the way to yesterday high, somewhere around 4,052, and this is unlikely to hit its ideal target at 4,140 levels. I think that it may even have problem getting beyond the 4,080 levels, which is the March 6 high. Okay, so going forward, if tonight the market cannot go beyond and close beyond 4,080, I think it is setting the stage for a unraveling below the 4,808 by April. Okay, over the Nasdaq, we're beginning to see the continued bullishness in the tech stocks, and this actually has the reasoning being most players in the marketplace expects the Federal Reserve to not only pause, they really expect the Federal Reserve to actually pivot by cutting rates, and that is actually very bullish for tech stocks. And then you can see the market has been relatively stronger in the Nasdaq 100 compared to, let's say, the Dow Jones, and that is the reason behind, because the market expect the Federal Reserve to actually pivot. And in my mind, I think the odds of the Federal Reserve pivoting by cutting interest rate is almost zero. Okay, at the most, what they may do is actually to pause the current rate hike. Okay, in view of the banking crisis that we have seen over the last 3 weeks. So it's exactly this banking crisis that the market believe that the Federal Reserve now will have no more room to hike rates, and they may have to do a policy reversal. And I don't think the Fed will do that, because that will mean the credibility will be torn to shred. Okay, so that is not on the card as far as I'm concerned. So that is actually setting the stage for the unraveling in tech stocks. So while the tech stock currently is benefiting from this current rally, but I think we would have to take it with a pinch of salt. Okay, I do not believe it has much more room to go. In fact, I think at some point it will have to follow the other main equity index in terms of Dow Jones to trade to the downside. Over in the Asia, we can see that this morning we can see that the Nikkei 225 continued to edge higher. The high traded is 28,124.6, and it has been a lot more bullish than I expected. And this current price really have not much of an upside potential left, because I think somewhere between 28,500 to 28,750, the market is going to find a top, and it may not have enough fuel to go the other way. Okay, so do not forget that April the 8th, there's going to be a change in the Bank of Japan governorship from the current Kuruda to a new guy called Ieda. And I think he may actually reverse Kuruda ultra easy monetary policy. And if that's the case, we're going to see a lot of volatility with anything that's remotely tied to Japanese yen, to Japanese equities, and even the bond market, because the BOJ has in their books a lot of bonds, okay, and these are all sovereign bonds, not only in the JGBs but also foreign sovereign bond as well. So if they're going to reverse the policy, we're going to see an earthquake coming up from Japan next week. Okay, over in the Hang Seng, we can see that in Hang Seng managed to actually edge higher in the morning session to a high of 20,721, and it did not quite get into this bracket of prices, which I believe will see the re-emergence of selling interest, and that level is 20,800 to 21,100. So we have not been able to see an extension into this bracket of prices, and the market is going to close in about an hour's time. So the time left for the market to actually do that is actually getting limited. Okay, but again, there is no sign that the market has topped out yet, at least not evident from this current chart itself. Over in the mainland Chinese equity index, you can see that same thing as what we see in the Hong Kong market. Prices continue to edge higher, but I think even for the mainland index, this is the CSI 300 index, the market potential is also quite limited. This is a three-wave potential rally, and the market topside is somewhere around 4,100 points, and is unlikely to happen today. Okay, so again, if you are trading on the upside, be very careful, because this market can actually unravel in very, very short notice. Okay, over in energy market, we can see crude oil continue to trade higher. Last night we have a marginal high at $74.63. I had basically gone short this market because this is a three-wave come to equality. That means it has hit its target, and now it's getting very vulnerable to the downside. If the market breaks $72.16, that will give me the assurance the market has already peaked, and my target is actually for a move below the year's low at $64.33 to perhaps below $50. Okay, so this is actually a very bearish outlook. My bearishness comes from the fact that last week there are already reports that President Biden has already allowed new oil drilling permits in Alaska. Now, this is something very, very opposite of what he did at the beginning of his presidency. Now, remember, days into his presidency, Biden did was cancel the Keystone Pipeline and ban drilling on federal land. Okay, so basically he is going for the Green New Deal to go carbon neutral, and that has been maintained for 2 years, and the result is that we see energy prices in the States have spiked up, and not helped by the war in Ukraine, of course, and that's made a lot of Americans very unhappy. And last week's approval to drill in Alaska come off the blue, and that means there is something fundamentally changed in Biden's approach to energy. Okay, and I think the reason can be traced back to the fact that the U.S. already has hit its debt ceiling, and in order to get some kind of compromise for the Republican, especially the House Speaker McCarthy, and I think what he wants to do is that in exchange for Republican agreement to raise the debt ceiling, I think they're going to push for the U.S. to allow drilling on federal land. And I won't be surprised in the coming days and weeks, before June, Biden actually allows drilling to resume in the Gulf of Mexico, okay, which is another big basin where they used to have offshore drilling. So we will see that there is this energy change as a result of this debt ceiling negotiation. So that means over time, you're going to see more supply coming into the market, and that is the reason for my bearishness, okay, in crude oil prices. Over in gold. Now, gold is getting very, very interesting because I've been telling you guys that the market is doing a triangle pattern, and we have 5 legs: A, B, C, D is almost in place. Okay, we probably will see another rush up, possibly to 1,990 to 1,196 levels. And then if the market comes down from here, I would want to be buying around 1,955 to 1,962 levels. So that will be an area I'll be very, very keen to buy, because what happens after this is A, B, C, D, E, and this represents the last 5-wave movement within the triangle pattern, and what ensures it's going to be an explosive rally to the upside. And once the market take out the resistance level, it's just going to take off. Okay, and the target, depending on where it breaks, okay, if the market breaks at the lower end, then we have a little bit more room to the upside. And what we want to see is that this explosion to the upside will come so fast that a lot of people will not be able to catch on to it. And by the time you get in on the long side, you'll probably be buying at very high prices. And beside the explosive rally, breakout rally, in this case, because the market has been going up before this continuation pattern. This is triangle is a continuation pattern. So the original direction is up. So after this, the explosion should explode to the upside, and the target, okay, is somewhere around $75 worth. Okay, from the point it breaks out, you add $75. That will give us the target for this entire move here. So if the market goes up to $20,040, that's where I want to get out. Okay, but the key here is this: as explosive as a triangle breakout is, the reversal is just as fast. So you want to place your profit taking level way ahead, so that you will not be blindsided, because the move is going to come so fast. It's just going to rush up, hit this target, and then immediately reverse. So you want to put that limit order in to take profit after you have got in a long position. So remember to do that, because this is going to be very violent. Okay, so if you are late in the game and you want to chase, you will always buy at much higher prices, and before you can take your profit, the market has already reversed. So be very careful. This could be the last one explosive move before the market corrects meaningfully. Okay, so do watch out for this move here. Over in the silver market, we don't see the same structure. In fact, the silver market has been so firm that it actually has a marginal high last night at $23.97. And I think the catalyst will come from the gold market, not so much on the silver market. If gold have an explosive move to the upside, silver is most likely going to follow through as well. Okay, so the question is, will it pull back? Based on the timing itself, I don't think we're going to see any kind of meaningful pullback. So, for the time being, I'm not comfortable buying at this current price in silver. So I will wait for the explosive move to happen in gold. After that, I will see a more substantial pullback in gold. And then that's when we will start to look for a buying opportunity in the silver market. And in the dollar itself, I have basically gone long, and the bottom at 101.55 appears to be holding out, and I do not believe it will break this time. I think the market is getting ready to reverse. So much so that my target is actually for a challenge of 105.87. So this is how bullish I am for the dollar, but I think the dollar has been under defense for quite some time. It's time for the market to actually reverse. And if the dollar wants to go up, obviously the other currency will have to come down. Sterling actually have a spike up this morning at 124.23, and then at a point when it have this new high, you can see on the 4 hours time frame, there is a reversal pattern here, and the market has come off since. So this is giving me the assurance that possibly the market has already peaked at 124.23 this morning, and is getting ready to trade to the downside. My target for this move is 121. I've already gone short last night, and the one that I actually has a lot more potential, that I see more potential, is actually the euro versus the dollar. The euro did not have a marginal high, unlike the sterling. The high traded was 109.26, and the market seems to be pulling back. And if the market continues to trade lower, I think the first area I will take some profit. I've already gone short. One, actually, I have a later short somewhere around here, and the other short was actually much lower. Okay, and what I want to do is the least ideal entry, I want to get out at 107. Okay, then I will leave the one that I recently entered a short in, and hope and target the 105. Okay, so I think the market has a potential to go and test the 105 level. Okay, this is how bearish I am for the euro versus the dollar. And over in the Aussie market has been in consolidation. I was hoping for the market to actually go higher to 0.6820, in which I have placed a limit order, but anything lower than that, I'm not interested, because the target is very nearby at 0.6565. Okay, so risk reward is not attractive to me, so I'm not going to take any position in the Aussie dollars for now. Dollar yen is worth buying, because I have mentioned dollar index, it looks like it has bottomed out, and the low in dollar yen at 129.64 will appears to be able to hold. And if the market goes first to the upside at 134 and pulls back to 131, this is where you want to buy, because this is likely to unfold as a larger degree 3-wave, and perhaps even go up to 137.90. Okay, so the next pullback in dollar I want to buy. Okay, for the time being, I'm not chasing this market. Over in dollar Canadian, we can see that Canadian dollars appear to have stabilized this morning at 1.35, and this is marginally deeper than what I was expecting. I was expecting market to hold at 135.11, but anyway, it went out marginally lower. I think it's getting ready to rebound, but I have no position in dollar Canadian. I think my resources will be better employed somewhere else, like the euro versus the dollar. Now, over in the cryptocurrencies, I have no idea where it's going to go, but based on the price structure, we see yesterday market actually attempt to go higher to 29,170. Did not quite go anywhere near or break the week's high of 29,380. So I think the market is getting ready to do a three-way pullback. Maybe this is what we will see, and I don't think the money is in crypto for the time being, so I'm just going to monitor and not take any position. Now, this is all I have for you. Now, remember, today is the last trading day for the month of March. Next month is going to be super volatile. I can almost guarantee you that. And let's see what happens over the weekend. Right. In the meantime, you take care, and I will see you on Monday. Bye bye.